All right. Ladies and gentlemen, good evening. The two people in the crowd I paid responded. Everybody else did not respond, so we'll try that again. Ladies and gentlemen, good evening. Thank you. Such a spontaneous crowd. My name is Larry Medowo. I'm an anchor correspondent at CNN. It's such a pleasure to lead this panel. And I want to say from the outset that this is just a small teaser for the African Financial Industry Summit. It's going to be this November, 28th and 29th November in Lomé, Togo. This will be the flagship event for the African financial industry, so we hope to see all of you there. And before I introduce the panel, before I introduce the topic a little greater, I want to say we are so honored to have here Her Majesty Queen Maxima of the Netherlands. She's here in her capacity as the United Nations Secretary General Special Advocate for Inclusive Finance for Development. Your Majesty, thank you for being here with us. Thanks a lot. We're also excited to have Dr. James Mwangi here with me, my fellow countryman, CEO of Equity Bank Holdings, the largest bank in East and Central Africa. We also have here with me Michael Froman, Vice Chairman and Chairman of Strategic Growth at MasterCard. It's really happy to have also on the panel Dr. Diane Karusisi, CEO of Bank of Kigali PLC, and that's Rwanda's largest commercial bank by assets. And last but not least, our co-host, Maktar Diop, Managing Director of the International Finance Corporation. Thank you for being on this panel as well. I just came in here from Kigali, and I was telling Dr. Karusisi earlier, and I noticed one of the things that maybe came out of the pandemic is more people are using mobile money in Rwanda, because during the pandemic, people were not using cash, and that's something that's developed and grown, and we've kept after the pandemic. Obviously, we're not past the pandemic, but that's a positive thing. I am from Kenya, and we led the mobile money revolution, and Dr. Mwangi can talk more about that. And so we have maybe across the continent one of the highest numbers, or highest percentages of people who are banked, but I don't think we're completely financially inclusive. And that's why I'm so excited that we have this extensive panel to talk about how much more we can do to make sure that every person on this continent, and hopefully around the world, has access to financial tools and to better their lives. And I want to start with you, Your Majesty. You have been the UN Secretary General Special Advisor for Inclusive Finance for Development since 2009. So you've done this work extensively. You know this work, you know the numbers, you've been around the world seeing how important it is to include everybody in this work. So why is advancing financial inclusion so important to the growth and competitiveness of economies here on the continent?
Well, thank you very much. First of all, thank you very much for having me here. And we can actually combine very well the CEO with my visit to Côte d'Ivoire and Senegal in the next 2 days. Actually, we started in 2005 with a year of microcredit. And starting from there, it was the first conversation we had in Kenya to actually allow mobile money to actually happen in 2006. So it's a long way, and it's amazing to see this happening in the whole of Africa. Why is this important? I think you've seen it yourself in your own country. But for individuals, this is extremely important. I mean, being able to get a payment seems to be something very, fruitless. But actually, having a woman that actually has a little stall of vegetables or fruit, and having the payments coming into it, that she can actually make payments from, her little business, and she doesn't have to leave it. It's amazing. The fact that she can actually track her history of payments and therefore get a credit and increase the amount of inventory she could actually sell off is also fantastic. The fact that she can actually start little by little, increase the amount of savings. So every time there's a little crisis, she has this buffer that instead of actually having to sell all her business, she has this buffer she can actually put aside and pay the moment that she doesn't have any income or somebody became sick. So it's very clear what this does to, individuals, households, more kids going to school. I mean, we have direct relationship. But what it does also to societies, let's think that, not only that a lot more people actually, the poverty is being reduced, but also we have an issue of formalization processes. This has clearly brought a lot more merchants and businesses into a much more formalized manner, which is actually very good for everybody. It's actually increased transparency. We've known, for example, for India, that have done a massive, journey of financial inclusion. It can add up to 14% on GDP growth. And I know there's something similar in Kenya. So this is very important for societies, very important for households, and very important for individuals. Very important, and you've actually mentioned COVID and the pandemic. We were just talking about it before. We know that when businesses were financially included, they actually came through the pandemic much stronger than the businesses that were not financially included. And this whole issue of resilience is very important. And given that in the future, we're going to have more risks, climate shock risks, maybe more pandemics, this notion of being financially included and being resilient to shocks will be of more and more importance every year.
So there's a direct correlation, Your Majesty, between financial inclusion and surviving whatever shocks the world might bring in future.
Exactly. And, certainly the climate change, now that we have countries like, up to 90% included, like the case of Rwanda or Kenya, there's something to be said. What are the intersections between financial inclusion and climate change sustainability? You've been talking about climate change sustainability only at a very macro level, but what does it now mean? Now that we have people that are included, what does that mean to actually get climate shocks insurance, farmers insurance, and these type of sort of resilience product that will really, really help us all go through climate change shocks.
And Dr. Mwangi, that is related to the work that you do among your 13 companies across the East and Central Africa and the Great Lakes region. And you use this pandemic to do some actual transformational work. Tell us a little about that.
Thank you very much. As Queen Maxima has just said, essentially those who were included, it was easier to support them. For instance, if you looked at equity, we gave accommodation and the scheduling of loans up to 3 years. So if you are included, then you are given a facility that doesn't compel you to make monthly payment, both principal plus interest, until the shock is over. So we're able to support the families. The second aspect of it was those who were included, as businesses were disrupted, new opportunities were arising. For instance, in Kenya, there was a huge opportunity for making and manufacturing PPEs. So then those who were included were able to get credit to get into that level of business. It's not necessarily PPEs. There was a lot of money to repurpose, to retool businesses and put them so that they could survive. So resilience was significantly increased by being included. And lastly was transmission mechanisms. When government responded with social safety nets, it was easier to disburse money for those who were included, because then you're using existing infrastructures, people are known, it's seamless and doesn't expose the need that people had because it's credited to the account. So those were the myriad issues. And lastly were issues like agriculture. While every sector in Kenya, other than PPE manufacturing, was going through a difficult period, agriculture was booming. And so essentially, those small-scale farmers had an opportunity because demand was high and they could be able to get credit as usual because they were in the system. We had their credit. And lastly was the ability to use digital infrastructure.
Right.
They were able to get financial services without going to the bank. So essentially, they could meet the obligations of complying with COVID management protocols, yet access their financial services.
Right. I also want to get the pandemic lessons on financial inclusion from the other banker on the panel, Dr. Karusisi. I was talking about how much more people are using mobile money in Rwanda. That obviously came out of the pandemic, but there's still an issue of affordability, right? Any technology that we're trying to adopt has to be one that is accessible to people.
Absolutely. Thank you for having me on this panel. It's absolutely an honor for me to share the panel with the Queen, with Mr. Diop and colleagues. So yeah, I think the pandemic has showed us many lessons. And today we don't see any more financial inclusion, 100% financial inclusion as a ceiling. It's actually a floor upon which we need to build more products to achieve deepening of financial services. Because today it's not a luxury to be a mobile money subscriber. But we need to have a number of value propositions to make sure people have now access to products that change their lives. So I'll give you one example, brilliant example in Rwanda, we've built, I think, a pension scheme for the low-income earners, for the people in the informal sector. And before that product was launched by our president in December 2019, only about 8% of the labor market in Rwanda had savings were saving for their old age. Only 8%. Now, this product is launched in 2019. Today, this number, 8%, has quadrupled. We have more than 25% now of people having access to pension saving. And it's a very, very simple product. You can subscribe on your phone. Your ID number is actually your savings number. You can put little money, as little as $1 or $2 every month. And for the poorest, for every dollar that is saved, the government is also topping up with $1. And this has been a huge success. And for us, people in the financial sector, we are learning, right? So all of a sudden, a product is designed, built, and you have massive adoption in no time and during COVID. And this is showing us that we really need to build the right products for the people. And when you have the right product built, because the technology now is there, then the adoption will be phenomenal. Thank you.
I wanted to also draw from the experience of Mr. Diop. This is work you've done for a long time, even before the IFC, whether as minister in Senegal, as the World Bank, and what you currently do. What are the key avenues for financial inclusion, and how does technology play a role in that, based just here, where we are in Côte d'Ivoire and across the continent?
Thank you very much. Thank you very much. So thank you very much. It's a pleasure to be here with Queen Maxima, all the colleagues here. It's just a pleasure to be with you. The first question is, I wonder how this panel will put together. And when we were organizing this event, and I said, who do we want to bring and to tell us about that story? So it was very important for me to have bankers, people who are working in the sectors, but bankers where we have diversity, and make sure that the perspective of the male don't only shape the way products are defined for the users, because half of the world need to use that product. So it was important. Whatever I can say, I may be sensitivities that I don't have in that topic. The second part was the world is converging. We have now philanthropy, working with AFIS, with banking sectors, and the same conversation we have on climate change. We realize that nobody has a solution on their own. We need to work together to team, to bring complementarity in what we are doing. So we are so happy to have MasterCard. We've been working on it. And obviously, we need to have a champion in everything. And that's the Queen, who has been really a wonderful partner in this agenda. And we've been also working on issues which are also important, which are not mentioned. And I always coming back to this issue of ID4D. ID4D has been a game changer for the financial industry, has been a game changer for services provided, has been a game changer for user cases. So I think that Kenya, Rwanda, Senegal now are doing, Kenya have been, the trend is there. I think we are moving in that direction. And I have no doubt that very soon the rest of the continent will be catching up. So now what are the challenges before us? More user cases and more specific user cases. So we require working on, I gave it my phone, these mobile phones which are expensive for most of the people in the continent. Lowering the cost. I know that Rwanda is working on it, but this is something that definitely will make a big difference in the user cases. Secondly, we need to have African investors, and I was on a panel earlier, investing in startups which are developing new user cases, believe in them, and make them. Today, if you look at the world of startups, they're mainly financed by foreign investment. It will be important moving forward that we have much more invest, because those will define the user cases that will be needed. Third, continuing reducing the cost of data is still too expensive on this continent. And for that, more competition, open to the competition, open to more access. And I think that if we do these three things and believe in this ecosystem where they are developed, we'll be able to have the next generation of user cases which will be able to give much more leverage to financial inclusion, because people will be, that will be the gateway for new services that currently poor cannot access. So this is the way I'm thinking a little bit the future in that space.
Right.
Thank
You
for
made
all of you.
You made an excellent point, and I wonder which you think is the greatest challenge of all the three you mentioned, between obviously the lack of African investment in the next generation of ideas and people who are innovators, but also the cost of data, which is still exploitative in some cases in parts of the continent.
I think that we will have and I like to be very practical in my, we have 2 new submarine cables will be coming offshore, Facebook and the Google one, Akinao. The current capacity installed on sub-Saharan African continent is 30 terabyte. With these 2 new submarine cable, we have 120 terabyte plus 130 terabyte. Basically, we multiply by 10 the level. If it's the right competition policy, we should be able to lower significantly those prices. And I think that's what it is. It will not be, in the past, it was I remember when I was in Kenya, it was, do we have a cable, do we have access to, now it's not anymore a problem. We will have 300 terabyte available for the continent. So if we allow everybody to tap on this pipe, we will be able to have competition and be able to lower the data. So for me, this is the number one thing. And I do believe that if we are able to do that, and investors believe in this startup, we will have so much user case coming out from that space that we'll be able to leverage even more the huge progress that we have done on financial inclusion.
Right. I saw, Mike, stay with me for a moment. I saw Queen Maxima nodding very actively when he was saying that. You want to jump in there? Go ahead, Your Majesty.
Basically on digitization to be able to do the financial inclusion. And when in the end of the day, we have a country like Côte d'Ivoire that has 130 million telephone lines, but half of them are actually completely dormant because the cost of it, even the cheapest data bundle, is 13% of a person's income. I tell you, half of the population cannot afford that. Affordability is very important, and it's not only the handheld, because of course we want to have a $5 handheld or smartphone. We also need to have a very competitive market on the data side. And that actually goes to the last mile, because of course we're very well served here in Abidjan, but in all the countries that we actually see, it's actually going into the rural areas, because that's really when it makes the difference. So this is an extremely, extremely important issue. So yes, competitivity is very important, but also very important is to actually have interoperability. If we do not have interoperable systems, we will not be able to actually have enough capital going to new ideas and new startups that will have no way to compete against a company in Kenya that actually has 70% of the market, because they push everybody out. So it is competition and interoperability, 2 preconditions to actually have new ideas and 2 innovations that actually have local knowledge of the market to actually develop those user cases that are really desperately needed.
Thank you. Michael Froman, I wanted to pick up on that because affordability is one part of it, and the other, if we're talking about adopting technologies to scale up financial inclusion, we have to make sure that these solutions are fit for purpose. They are built for the unique challenges of these African markets. Please talk to us about that.
Well, thank you, and honor to be here. And I find myself in violent agreement with everything that's already been said, not surprisingly. Look, I think we have to look at this in multi-step process. One is access. You need access, and as Queen Max has said, if you don't have access to affordable connectivity, that's a big problem. And we know that about 50% of the sub-Saharan Africa doesn't have access to good connectivity, and the other half, it may be intermittent, or maybe too expensive for many to afford. So you need access. But as we move more and more to accessing the digital economy, it underscores the role that data plays, and that underscores the role of trust. Ultimately, we need to make sure we move ahead with digital inclusion in a way that people feel like they can trust the system, that their data is being used appropriately, that it's not being monetized in a way that they're not comfortable with, that it's being protected from fraud or from cyber threats, which are increasingly prevalent in these markets. And then thirdly, as you said, it's got to be fit for purpose. And that means you can't just pull some solution off the shelf in the United States or Europe, but you've got to co-create here with partners on the ground what's appropriate here. And that's where I think, as Mokhtar said, that's where I think the powerful use cases will come from. Bringing farmers, for example, who have been largely excluded from the financial system, allowing them access to the digital economy, allowing them to access the digital economy offline as well as online, which I know sounds counterintuitive, but it's possible. And through that, giving them access to be able to sell their products directly to buyers, get more for their products, be more productive, and get access ultimately to the working capital they need to expand their operations, to create greater financial security and greater resilience, as we're going to need with climate change and other potential exogenous factors.
All right. Dr. Mwangi, we were talking a little earlier about, I think, the unique case in Kenya about financial inclusion, where you mentioned the statistic was that 90% of the population has either a bank account or a mobile money wallet, which has got to be one of the highest on the continent.
Yeah, that's true. It is part. Kenya is a leader in mobile wallets, but also financial inclusion.
How did that happen? I think that's a question a lot of people have. Is it something the government did? Is it something people like you who are in the big banking sector did?
I think the first one was, and allow me to use this concept, a very entrepreneurial central bank that allowed the telecoms to test a concept outside the regulation, and then created regulation when the user cases were approved. That was one of, the second one is a liberal regulation that allowed the banks to adopt agency banking, mobile banking. So the concept of innovation didn't start between risk management by the central banks and the needs of economy. And then a very entrepreneurial community that was willing to adopt solutions that worked for them. So I would really take those three. And of course, that was supported by banks like Equity that were willing to invest substantially to meet the customer to their point of need, bring convenience to the banking industry, and take banking services to the last mile. However, it could have been better if, for instance, there was a perfect convergence between financial service providers and telecoms. That has not worked. We're still stuck with interoperability. We're still stuck with very high margin business models other than high volume, low margin. So that has been a constraint to affordability. Otherwise, the efficiency would have been much better.
That is a fascinating gap that you say exists in a country which is a leader in financial inclusion, but there's yet this lack of operability between these two kind of key planks of this conversation is still missing. Is anything being done to change that, do you think? I'm just going to go in and ask that question.
It's not fair to ask him.
Well, he's a big player in the industry. He's a big player across the Great Lakes region.
I'm sure it is not fair because the governor of the Central Bank of Kenya is in the room. But let me say
We hope he's taking notes.
Let me say this, that truly we need to develop customer-centric policies such that the issue of customer becomes central to business. I think regulation needs to really look at what is good for the customer. We shouldn't be competing on infrastructure where we refuse to be interoperable so that we can make money. Then we should say the public good supersedes the private profit. That's how I would take it. But I think that question would have been very good for Mokhtar.
Yes, Mokhtar Diop, this is a perfect place for you to jump in. The central bank governor won't be cross at you. You don't operate in Kenya, so you're fine.
I don't know if Patrick is here. I don't want to get into trouble with Patrick. No, but Patrick the governor has been very supportive. And I think that I cannot agree with what you say. Just you were spot on. And what makes a difference? People will be surprised. Actually, the technical solution that M-Pesa had in Kenya existed in other African countries before Kenya. I came to Kenya at that time, in 2000, and I knew that there were some technical people who have designed a product similar. The big difference was that Kenya accepted to have a sandbox regulation on financial fintech. That sandbox regulation allowed people to test a new product, and M-Pesa became what it is. So it's not only about technical solution, it's about regulation. And in this world which is fast moving of fintech and financial inclusion, you will have a lot of new products that the regulator don't know. And they will need to be ready to have sandbox regulation, test them, work around the regulation of it. It's kind of like the issue of privacy. Privacy on data is always something that we'll be working on, because facial recognition didn't exist in the past, so you cannot regulate the privacy issue linked to that. People were not using as much data on health issues as they're using now. So it will be always a kind of catching up effect, because that's why innovation happens. And I think this is an important element to have in that conversation. So there will be a moment of unease by the regulator, but they have to accept that that situation to foster innovation. Otherwise, the country will be also lagging. Interoperability is extremely important. And I think when Maxima talked about it, because she lived that discussion with ID4D. So another important issue there is that should we have a system which is a proprietary system where you control a little bit the technology around ID, or you just want to have a system which is laid down and everybody can use the numbers and the identification to have application. That is a big discussion today, which is affecting and slowing down the access of certain services. So having it right on interoperability from the beginning is a big lesson of that we can take. That very happy that you put it. Last point I think that we need to discuss is to be able to now democratize a little bit the knowledge around fintech on all these questions. That is not remain just a topic of people who know about it and so forth. And in Kenya, you know how I feel about Kenya. This is one of the countries that I really feel a bit at home. But you know, it was interesting when someone went to the marketplace, talked to a seller, and she said, "Googly." So the person said, what is it, googly? She said, and she meant Google it. So a salesman woman in the market is talking about people about Google prices now. So this is a total different change that we have compared to what we had 10 or 15 years. She's searching prices on the market to benchmark what she has against that. So just think about what we can do. It will be valid on vaccine, it will be valid on many things. But we need to think about those user cases and make sure that we have all the instruments given to people.
I think that leads nicely into the question I want to ask Queen Maxima, because drawing on the experience and best practices from around the world, we thought you're gonna jump off the stage. We were worried about the stage, and he's slowly inching toward the edge. He's fine. Your Majesty, drawing on experience and best practice from around the world, so what are the key success factors for inclusive fintech to thrive here in Africa?
It was mentioned already, and that's the digital public goods. Some actually are very good for access, which is basically having an ID, having connectivity, having affordability. Some are good to actually regulate the market, which is basically fair competition, interoperability. And some of them are actually to protect the consumers and the stability of the system. Because we have not talked about the new risks that actually come with the digitization of economies, which is basically cybersecurity issue, data protection, data agency, whatever that might be, because we have to still define it, because it's not the same thing as ownership, and consumer protection, and digital and financial literacy, because that's basically the ability of consumers to deal with these new challenges. I mean, not everybody, we were looking today at a whole research, and I think 15% of consumers here in Côte d'Ivoire has had some kind of fraud of some messages that they lost some money and they didn't know who to call to actually ask the provider to actually, give the money back. So these new risks need to be quantified and need to be really, make sort of recourse mechanisms, have insurance against it. We need to, because, I mean, you have new systems, you have new risks. So it's a new situation that we have to sort of, cater to it and actually protect the consumer and protect the stability of the system.
Right. Because I can see the danger there. If somebody I know got a bank account and then they got scammed and lost all their money, then maybe I don't want to have a bank account. I'll keep the money under my mattress or not get a mobile wallet.
Yeah, that's one thing. And the other issue, which I think in order to actually keep the system that it continues to be competitive and in which the consumers still have choices, we have to think what is the next step for public goods to be had. So we're thinking with India, for example, now they're going to have the G20 presidency, about how are we going to make this depository of data in which I own my data, and if I want a product, I launch my ask into the market, they can come and say, I offer it for 2%, I offer for 1%, and I choose to, this is the one I'm going to choose, and then I give all my data. So we have to start thinking about sort of this data agency to actually have the consumer, having much more ownership and be much more empowered and being able to have more choice.
Right. I see you, Michael, noting, because you alluded to this earlier before, but if you can also talk about the importance of education, training, and financial literacy to make sure that people have a pathway to long-term financial security.
I could answer that, but I'm not going to.
Okay, the panel has a mind of their own now.
I want to add on to what Queen Maxima said, because I think it's a really important issue, and it's really important at this conference, because one of the titles of this conference is Sovereignty, Green Growth, New Industrial Transformation, something of that sort.
Right.
I really like the comments of the Nigerian Vice President this morning, because there is a constructive tension between the natural desire for governments to want to exert sovereignty. And I spent half my life in government, sometimes that means control. And there's that element, but there's also the element of digital public goods, as Queen Maxima highlighted, and the value of having private sector innovation, being able to create those use cases, create the cybersecurity. The criminals on the digital economy are far more innovative than most governments. They will work faster, they will invest more, and they will crack the code on any account. You need to be able to bring private sector innovation in where appropriate so that we continue to build a safe and secure environment for payments, for financial security, and the like. And striking that balance between the legitimate concerns of governments on sovereignty, particularly around consumer privacy, the value of certain digital public goods, but very importantly, the role of the private sector in innovating in that ecosystem to ensure that the consumer, the financial system, have all the tools that they need to survive and to thrive. I think that's ultimately going to be the challenge that we all need to face.
And do you get the sense that the industry is aware of this and they're making efforts to try and make sure that they address that?
I think so, but I think there's a collective education effort that needs to go on between the public, the private, the nonprofit, social sector, to really understand each other's perspectives, each other's imperatives, and to make sure that we're pursuing financial inclusion, digital inclusion in a way that addresses those together.
All right, Dr. Karusisi, I want to pick up on something that's straight from the key messages on this panel, which is what is holding back a more widespread adoption of technologies, of financial technology for the unbanked and the underbanked, based on your experience in Rwanda?
Thank you. I think all the panelists have said it. Access is becoming a flow. It's given. And we need to build more business models. I think data, also, as everyone said, people have to gain back access to their data. I think of the Revenue Authority in any country. You can imagine the amount of data they have and the value of this data. As a banker, I would want to know, how much a business that is banking with me pays in taxes. It can be VAT, it can be pay as you earn, it can be the contribution for Social Security. But even a consumer, a client, is not able to tell me you can have access to my data. And this can create a massive business model. If people could tell me, you have access to my data, my data with a tax body, with a pension body, with whoever, with the government, and then on top of that data, I build models and credit and products. I think that would be great. So we need to get to a level where we get a governance around data that is supporting all the business models that we want to create. Now, data remains something that is very, not even fragile, it's taboo, There's a big war between banks and telcos, who owns the client, who owns the data. etc. So we need a regulatory body, maybe not the central bank, but someone who is on top of data governance,
Right.
and helps facilitate all of us players and fintech and all the entrepreneurs out there to build business models on top of this data, because the data is available, and you can have 2-3 smart young people to create products out of this data, but it's just kept somewhere there. And we need to be more creative around the data governance, because it's going to unleash a lot of opportunities for financial services.
And what do you have in mind? I think Ghana does have a data protection commission, which is one of the first such kind of bodies on the continent. But we don't have something similar to what the European Union has with GDPR, which really safeguards people's data. What can it be used for, and for how much extent? Can I ask you to delete it if I don't want you to keep it? And can you sell it to a third party and stuff like that?
I think we have to not confuse data protection to data agency. One thing is to, I give a bank, I have a relationship, and I put an agree, which, by the way, I read all the terms and conditions, and nobody reads them, and nobody understands them.
20,
which
30
is something
pages.
on consumer protection needs to be actually talked about. But okay, I say I agree. And there's regulations that actually say what that company will do and not do with my data.
Exactly.
That's what this regulation is about. Something different, and I'm trying to bring is, and you were just basically echoing what I was saying, is, so the tax authority has a part of my data. My bank has a part of my data. My health has, insurance has a part of my data. They don't speak to each other.
Yes.
I don't have access to that data either. If I need that data to actually get a better, product that I would like to have, I don't have access to my own data. So this notion made me thinking a little bit outside of the box, and start thinking, okay, what if I actually had access to all that data of mine, and I could actually have agency of my data, whatever the ownership discussion we could actually have. And I say, well, I will repeat that, I need this product, this is my data. What can you give to me? What can you offer me? I think that would actually unleash a lot of innovation and bring a lot of new entrants to the market, because right now, these new entrants do not have access to that data. And by the time they need volume, of course, to actually make their businesses work, it will take them 10 years to actually very little by little get that access to that data. And then there's no VC that is patient enough. And that is a situation you're starting to have here in the fintech here in Africa many times.
So I agree, that's exactly what I meant. The data is there, but the only discussion that is happening is around protection, around not hosting your client's KYC on the cloud. It has to be on a local cloud. This is the discussion, which is the wrong discussion in my view. But we need rather to look at the value of this data and how do we give clients, people, the agency over their data, so they can get better services, better pricing, even access to services that they even don't know of as we speak now.
And access to that service, could that include, because across the continent we have a really low rate of mortgages, and I'm putting the bankers here on the spot, for instance, because people just can't afford to buy a house when you're charging 13-15% for a mortgage. And yet I pay my rent regularly, but there's nowhere where this is captured. If you had a central repository to say that I pay my rent regularly and I am a good potential client, then maybe you could give me a mortgage at a lower rate. Is that also a natural extension for that?
Absolutely. I think this will appeal to all the retail clients, if they know that their behavior in their daily lives is going to have an impact on their credit score, that will have an impact on lowering the lending rates for them. I think that would make sense, and they will be eager to share that data, because they know that this is good data and it's going to give me an advantage when I speak to my banker. But today, I have my client's data, I have the KYC, I have the transactional data, but that's it. And I take my decisions on only that very small portion of data.
All right. Dr. Mwangi, I saw you nodding while we were talking about this. You've worked in this industry for a long time. I like putting him on the spot, in case you haven't noticed.
Yeah, I think truly the financial services increasingly are becoming conscious that data belongs to its clients. It can have enormous value. And as you can see, we are now starting to offer bank as a service. And once you really offer bank as a service, then essentially you're saying, one, I can give out my APIs And then if you can configure them well within an ecosystem, you can retain that data, you could be able to use that data. We also are saying on where agency regulation has come into being, we'll provide whoever you appoint as your agent to give them the data you need, particularly for decision making. So increasingly, we are seeing that that flexibility is happening. But I think data will be much more central if we can use it to get to understand the customer much better. Then we are able to give them proposals that are appropriate to them. We give them the right product at the right price, because you're able to assess their risk and price risk appropriately. So in addition to data, banks are now using for the industrial technologies, revolution technologies. We are having a lot of machine learning, we have a lot of artificial intelligence analytics. And as the question that has really not been answered is whether the clients are getting the full benefits of this analytics capability. If customers were really getting the full benefits, then we could have seen significant differentiation in terms of pricing. But we haven't reached there. Clients are still commoditized per product as opposed to personal risk.
All right. Mr. Diop, I wanted to ask you, what can DFIs like you do to contribute to financial inclusion, especially in low and middle income countries, which still have the highest populations of the underbanked and the unbanked?
The World Bank is helping a lot on the policy front, and it's what I've been doing for many years, and helping government to finance the public good dimension of what we're doing. And IFC is doing the investment of the private sector. In that space, actually, it's mainly the private sector. The government is not doing, doesn't need to do a lot. And I think that I just want to come back to a little bit all this issue of financial inclusion, interoperability, fintech. We're talking currently about the free trade agreement in Africa. So just to picture the interoperability and the right data privacy framework, how would we allow people to do? Someone in Kenya being able to trade much easier than someone in Senegal, which is not the case today. Okay? Today you have to, the concept of correspondent banking even will evolve over time. And so I think that we have a lot of things to think about, and we are investing in those areas. We are looking at the use of data. I just was signing a project with a company in South Africa who is the health sector, and they will be working, guess on what? They just bought a company which is investing in collecting the genes and to have gene banks, because to be able to target the service, like you said, Mr. Mwangi, it's not only in the financial sector, but in all sectors, the data allow you to be much more specific in targeting the service, the health service that provides the medication and whatever doing. So what they're doing right now is working on building these gene banks in Africa. Because guess what? A mammal cancer in a woman in Africa has different genetic elements than a mammal cancer in a woman in Europe. And all the medicine which are today designed by the oncologists are based on data that are being collected in those constituencies. So there is a lot of things, and we were talking, Queen Maxima, about, you want to do a lot for women in Africa in the future, but I think this is a kind of linking financial inclusion, data, and those two things which are specific to women, including health services. So what we're doing, we're investing also in disruptive technology. We have a fund, and actually we are about to create a fund dedicated to Africa on disruptive technology, whereby we will be helping those to be, we hope to be able to mobilize later on when they move from incubator to the next step, to mobilize African investors to invest in it. Because I repeat it, and you mentioned it at the beginning, African investors, large investors, haven't yet taken that space. Is still dominated by countries, and there is no reason for it not to happen. So it's a call. So when I'm looking at the camera, for big investors in Africa, put your money in startups in Africa, because there's a lot of innovation happening there, and that's the future.
What's holding them back right now? Do they prefer just solid, they want to build more buildings and they want to build more fixed assets as opposed to investing in ideas? Because that's for me, a mystery that I haven't quite understood.
Because they don't realize that a young Nigerian who studied in Nigeria, did all his education in Nigeria, created his startup in Nigeria, was an incubator, developed it. Guess what? Someone came from Silicon Valley and bought it for $200 million.
Right.
Okay? So I want to say that it's happening more and more frequently, because they understand that there is a lot of creativity, and people are solving problems that they don't have to solve in their own space, but which are solved in a way which is extremely innovative, that can be replicated in their own ecosystem. They also realize that this is the fastest growing part of the world. That's where the needs are. So it's very important for even Africa development, and to be able to build a resilient system, to know or not only think about brick and mortar and things which are tangible, but there is all this intangible wealth that is available and could be expanded, being in bioscience, being in vaccine research, being in, well, name it, but that will be based on data. And that's what I think that we could leapfrog in Africa if we get it right.
Your Majesty, you wanted to jump in.
No, I stayed with the women comment. The reason why I have been doing a lot more for women digital financial inclusion is because we're having numbers coming out at the end of June about the financial inclusion situation in the whole world. And I know that in many countries in the African continent, the gender gap has actually widened, not gotten smaller. So we have to do an ulterior effort to connect women to economies, to the digital economy, and definitely be financially included. And this is not just business as usual. We tried that before. We really have to start sort of, the affordability is an issue, competitivity is an issue, connectivity is an issue, but also start to look at the needs of women, underlying needs of women. Is it health? Is it school fees? Is it, how to actually increase your inventory? Is it about sort of, certain type of buffers? I mean, we have to start looking into women entrepreneurs that would actually look for the solutions for women and also include women as well. Otherwise, we're not counting with 50% of the very productive population of Africa.
That's actually what I was going to ask you about, Your Majesty, because you talk about these numbers coming out, but also the fact that the pandemic has widened the gender gap, and so women have been left worse off than they were before the pandemic.
Well, that's the thing. I mean, we cannot say generalize it, because some countries have actually widened the gap, others less. A couple of countries actually had even reduced digital inclusion, because for them was, to decide, do I pay my subscription or do I put, food on my table? So the affordability issue is a very important issue to include actually women. In general, we've actually seen that everybody's growing. It's just the difference between man and woman is not really, closing in all the countries. Some of them, yes, some of them are widening.
All right, Michael, I'll see if you want to answer this question or you want to answer something entirely different. It's up to you.
Well, look, I will add to it, because I think Queen Max was absolutely right. And it takes an intentionality around not only focusing on financial inclusion, but the particular challenges that women face in being financially included. It varies by country and region by region. There's not one single answer. But that's why it's important to start where people are. And I see my friends from Gavi in the front row. We've been working with Gavi to digitalize the moment that a mother brings a child in for a vaccine. Get a digital identity, get an electronic health record of the vaccine. Now they're part of the digital economy. They can use that same ID when they're a farmer to connect to markets, or when they're a micro merchant to connect to sources of working capital. And you begin to get them on that path, wherever they come in to the digital economy, of getting on that pathway towards greater financial security, greater financial well-being. Because while access is the first step, the goal is not access. The goal is financial security, financial health, financial well-being, and that's what we really need to try to achieve there. And that's going to rely a lot on how successful we are in bringing women into the financial system.
All right, well, I still have you. We've mentioned a lot of barriers and challenges that are blocking or hindering financial inclusion. But what's the role of stakeholders, regulators, public and private sector, finance leaders in trying to overcome them? If you can sum up nicely for that.
I'll try and be nice. Yes. Well, look, I think regulators and governments, none of these issues are going to be solved by one sector alone. We need the public, we need the private, we need the social sector as well. And for the public sector, the regulators and governments, the focus is really on the enabling environment and making sure that even as they seek to exert control or sovereignty over one part of their policy or another, totally understandable, they're also creating the opportunity to be interoperable, to be part of the global economy, to get the benefits of global innovation, to take advantage of this. You know, listening to this conversation, this is the open banking industry that Queen Maxima and Dr. Karasisi was talking about. It's just beginning to get off the ground in the US and in Europe. This would be a great opportunity for Africa to leapfrog and to really get it right, that use of data agency. And I think there's a real opportunity there, again, if governments create the right enabling environment and allow the innovation within certain bounds to continue.
Dr. Karasisi, he says no one body, no one agency is going to do it alone. It needs multi-stakeholder cooperation. You recently signed a really interesting deal with MTN and Bank of Kigali and Intelligra, which kind of is a good model for this.
Yeah, absolutely. We figured out that we need more people having access to a device, which is still a problem. In Rwanda, about 30% of the people who have a phone only actually have a smartphone. So what we want, and we are working with MTN and Intelligra, is to finance these phones, because people will tell you that the first hurdle for them to get a smartphone is the cost. They can't pay $50 at a go or $100. So we want to smoothen that journey, and we are working with, again, this is exactly what we're doing. MTN is going to source the phones. Intelligra is a data science company that is going to provide scoring models. And for us, some of our clients, of course, will have access, but for us, we see the advantage, because even people who are not our clients will have access to these phones and become our clients immediately. And we'll be able to cross-sell more services on top of that phone loan. So I believe this is one of the models that show the value of multi-stakeholder partnerships. And there'll be many more coming. And the good thing is Intelligra is a Nigerian company. And we see many of these companies on the continent, with brilliant ideas and just looking for one or two companies that will trust the model and try it. And I believe in the next couple of years we'll have so many of these models that will address many different pain points of the clients and eventually unlock the digital economy that we are talking about. Thank you.
All right, Dr. Diop, you've been a champion for this financial inclusion for a long time. Are there similar projects like that you're excited about? Any trends when you go around the world and see different ways that governments, private sector players are trying to make sure that people are financially included? Are there any things that you think are good models that can be replicated around the world that you think people around here should know about?
A little bit, a thing that I learned in my life is that models are some things that you have to be careful to try to replicate. You can take the idea, you can take the principle, but understand the institution of a country, of a place, understand the culture, understand the place to be able to make it happen. And I think that I can give you an example. There were a Nigerian member of the diaspora. A few years ago, it was 10 years ago, who was in the US, who was used to Amazon and so forth, said, I want to replicate the e-commerce model in Nigeria. So he came with the Amazon model in mind. So you pay with your credit card before getting the product delivered. He tried it in Nigeria and nobody wanted it. He just reversed it. I pay when I receive the good. And interestingly, he had exactly the same profitability and the same level of payments that he would have received if you have with the models that they're using in the US. So the idea of e-commerce was powerful, the idea of the, but the context was totally different. In my country, people want to see the good before they pay you. They want to see the food before paying the food. They will not in general, but it's changing slowly, okay? But I think that this kind of thing that we need to learn also about models of just cutting, cookie cutting approach in it. That being said, I think that what has been a success in lot of countries is what Mr. Mwangi said, sandbox regulation. Innovation, people are trying new things, you don't know anything how to regulate it, let's try. And after you try to regulate it. If you try to regulate everything and you think that you know it all about innovation, you stop innovation, number one. Secondly, ensure that there is a level playing field for people. Not to have a situation where you have incumbent who have innovated, taken the market, and stop people to come on things. So create a regulatory framework where you have competition and people opening an incumbent to realize that it's in their interest to have more. You come back to second point that you said, is it volume that you're making or you're making about margin? So when an incumbent which has been dominating a market for a long time, in his or her DNA is I made money on the size of my market, not on volume. And because it's less risky, you control the market and you have the premium. So how to shift the conversation and say that you can make the same money in your business model by accepting competition is something. Third, accepting that the world is not made of half, which means people who look like me, who are male, and that also other people who are as important as we are in the world, and that we need to serve everybody. We need also to serve minorities in countries. For instance, in Latin America, the Afro-Latin community is lagging behind in a lot of services, of financial inclusion and inclusion, and we need to do more. So we need also to make sure that we have a very inclusive approach in doing this and tailoring the product towards it. Lastly, I think that what I learned in these last few years is that the world is becoming less and less segmented. 15 years ago, the world of foundation will not talk to us. Okay, they say, us, we are good. Just, Mike, I need to tease you a little bit. But at that time, you were not anyway in foundation. You were in another world. But at that time, you know, it was, we are the good doer, and these guys, you know, they profit or whatever. They're not talking. DFI was saying, oh, these guys are living in their clouds. They don't know the reality. And government were looking at all this in a suspicious way. Okay? And I think that the world has changed because people realize that we need to converge. I never heard as much the words blended as I've heard it in the last 3 to 4 years. The foundation realized that if they want to have impact, they need to leverage us because we have more money available. The public sector is realized that if they want to be able to solve the issue of vaccine, the issue of sending money during the COVID-19 to poor people, they need to work with the industry. So more and more convergence towards these issues. That's why I believe that this type of conversation is important to have and to continue having repeatedly and to go from this to have very actionable plans that we could implement and very targeted. So this is a little bit what I take myself when I look at the situation now. But I'm very, very, very hopeful and very impressed what I've seen on fintech in the African continent. What happened, the dynamism that I've seen on fintech in Africa in the last 5 years is very much in line with any other continent in terms of dynamism, in terms of creativity. So I'll stop here.
All right, Your Majesty, you wanted to say something, but also as you respond to that, I also want you to give a challenge to people here because they're all super influential in their countries, in the public and private sector, and they can implement some of these things we're talking about.
I picked up the microphone because he started saying something, but he completed what I wanted to say. I just wanted to reinforce that, which is this notion of private-private partnership together with the public sector. I mean, we have a CEO partnership, and we have sort of consumer good companies, we have financial institutions, we have telecom institutions, and we've all noticed that, you know, doing it alone, you're never going to make it to actually have the volumes you need. One needs to actually have these partnerships between, I mean, we've actually had PepsiCo, MasterCard, and, you know, a telecom company doing something in Pakistan, doing it in Kenya. So it's very important that we start looking beyond our boundaries. And very important for the regulator and the public sector is not to look in sort of siloed at institutions. We have to start only regulating the services. I don't know if it makes sense, but it happens a lot with financial inclusion that actually people look, or the central banks just look at the institution. But you're a bank, you should only do a bank. You're a telecom company or you're Unilever, and you should do. This whole notion that we're going to have more and more complicated and partnerships working together to actually reach the customer with a product that they really want. So we will have to be a lot more open in looking how do we regulate those issues going further.
All right, I have just a couple of minutes for a few questions from the audience. If you don't have questions, I have more questions of my own. But if you have a question, this is the time to... Can we get a mic to him over there, please? It's going to get to you at some point. And there's a gentleman there, and I think there's a lady here. There's a lady here at the front. I can donate my mic. Don't worry about it.
Just take mic. Thank you very much. You need
Thank
to hear
you.
your voice, guys.
Thank you. Appreciate it.
Thank you. My name is Yvonne Ike. I run the Africa business for Bank of America. I just wanted to add a contribution to this. Just one important thing, we talked about the importance of fintech companies galvanizing the financial inclusion. It would be worth all of us in the room thinking about how we can set up specific funds that invest in more fintech companies to take them further, to make more relevant African solutions for the continent. As Mr. Diop said, we can't continue to rely just on Silicon Valley funding the bulk of this investing. Part of that as well is when we look at the real economy, I have to say that both of the bankers on stage are more unusual in how far they've gone to serve the SME community. Most commercial banks still are not ready to take the risk. So leveraging the technology through fintech and using the virtual banks and the technology-led companies that are coming up is another way to accelerate financial inclusion in the region.
Thanks a lot. Appreciate that contribution. Let's get a mic to the gentleman back there, Rama.
Thank you very much. I'm Raman Yang with Bloomberg. I'm going to go back in the opposite direction, very low school, old tech stuff. And this is directed to the bankers that we have on the panel. To use the example that Larry gave, if I'm paying my rent through my bank, you already have that data. You've had it for 5, 10, 15 years. We look at the sort of lending habits that we have in many markets, and Dr. Mwangi will know this. We have only 27,000 mortgage accounts in Kenya. But in reality, you drive around Nairobi, you've got houses coming up 24/7. People are financing that through loans that they're taking, either through their SACCOs or through their banks. So there's a lot of data, arguably, that banks are already in possession of, that they're not utilizing at all. So how then do we fix that problem? What is it that you need as bankers to do to essentially utilize the data you already have?
All right, I think I want to take all the questions together because we're just coming down to 5 minutes. So the bank has heard that. Let's get one more question in here. The lady here has had her hand up for a minute. Over here, in the middle. Thank you, appreciate it.
Thank you, everyone. Lovely panel. I learned a lot. So my name is Nene Meiga, and I wanted to go back on the topic of connectivity because I believe it's a key lever to drive financial inclusion. And I was quite surprised by the comment about needing to reduce the price of data. I think we all believe in that, but competition being the solution. I don't know many countries where you have more than 3 telcos that are actually profitable, and it is a very capex intensive industry. Moreover, very often when you look at this industry, you have so many taxes, not on profit, this is regular, but on revenues. And so much regulatory pressure that actually I'm wondering if what's keeping the prices up is not rather the regulation and taxation of that specific sector, rather than the lack of competition.
All right, fantastic. Okay, yes, sir, you got a mic. Will be the last one.
Thank you very much. Good afternoon, and Your Majesty and the panelists. My name is Neville Mikey. I'm from, I run a provincial agency in South Africa called Trade Investment KwaZulu-Natal. I'm the CEO. Just two questions that I have. One of the biggest challenges that we have in South Africa within the banking sector are the bank fees. How have Kenya and Rwanda managed that, particularly for the poor, the issue around banking fees? And it's a big discussion we've always had in South Africa around that. And then the second one is change management. As Africans, we're always skeptical about new technologies and online shopping, etc. With COVID, it has taught us that that's something we can embrace. But how do you then translate that to the poor of the poor, that they're able to really understand that and really embrace that from a change management perspective?
All right, fantastic. In the last minutes of this conversation, I'll start with you, Mr. Diop, about the lack, the need to reduce data and the costs on the taxes on profit, I believe.
No, I think it's very interesting, the point you made. I think it's not one reason. Let me give you an example. The telco is a diverse business. You have the voice operator, you have the data operator, and you have they are facing different reality. And in some cases, most of the time in Africa, they were merged. And what was happening is that the access point was controlled by one company, and which was selling the data to other company. So what I'm advocating when I'm talking about competition is, for instance, for this new to cable, Akineo and Facebook too, that when there is a landing station, it's open access to everybody. You don't have one person who control the access and who decides the price to set to. So if you are a small provider who wants to enter that business, you connect to the land station, etc. Second point is share infrastructure. Moving forward, that will help cost a lot. What you have is a vertically integrated situation, whereby the telco own all the base station, and therefore have to cover all the infrastructure and capex linked to that. What we have now doing, and we have developed it in start doing it in DRC actually, is to have a shared infrastructure on base station. And just by having that and bringing competition in that space, we reduce by 3 times the cost that people were paying for base station. The third one is to be a little bit technology agnostic when you are regulating, so that you are much more looking at the outcome, at the services, and at the particular product that you have. So I think those are elements. That being said, the point you raise it is very important about taxation. And what happened, if I might say just to 30 seconds, because it's a very important point. I think that at some point when the market was very young on that, the incumbent didn't have a very, I would say, fruitful conversation with the regulator. And there were a feeling from the regulator, sometimes justified, that the incumbent was not providing really all the data and information about the profits that they were making. So the Minister of Finance in those countries get in the position of saying, let me actually tax them on something that I can see, which was not necessarily the most optimal way of doing, but it was because there were asymmetric information between them and the incumbent. So now that countries have been, these telecom have been investing a lot of capex and doing a lot of investment, they're facing a situation where these taxes are becoming too heavy for them to continue their investment. So they need to have a conversation with the regulator and bring much more transparency in the data information between the telco and the government to bring that trust, whereby people can have a much data-based conversation in setting the optimal tax rate for this industry. But the combination of unbundling, the competition, and looking at this tax issue, I think the combination of all these will be helping in reducing the cost.
All right, thanks a lot. Dr. Karusisi, you want to tackle the data question and the costs?
Yes, so it's true that banks have some data, but in countries like mine, the cashless economy that we all talk about is quite new. So most people would do the transactions using cash. And now this cash has moved to mobile money. So we still don't capture that data. But that said, even the data that we're using, because as a bank, beyond the KYC, you have a lot of transactional data. We haven't had the capacity yet to mine that data and help us build scoring engines internally to be able to provide differentiated services to our people. But I think the train is moving now. We are able to get data, to have people who can understand and use that data to get us personalized services. To bank fees, I agree.
The support that you get from and what is the competitive environment in that scenario? But let's go to the issue of data and product. It's not that you have been paying, you have been receiving your salary, you have been paying your rent from your account. We have that data. But sometimes we are not able to develop the appropriate products for you. Because if you look in most parts of Africa, deposits are short-term. The maximum a bank gets is 6 months of deposits. To get you using the rent you pay, we need to give you 20 years. Then banks are scared of the mismatch, where the liability side is 6 months and the asset side is 20 years. So any shock will kill that bank. So the bank is aware, but is not able to move to that. And lastly, is sometimes regulation. If you look like your country, Kenya, it says you cannot charge a customer more than interest more than the principal. But if you have a 20-year loan, inflation is 7%, risk-free is 7%, that is 14%. By the 6th year, you have already charged the interest equal to the principal. So you can't do that kind of lending or by basis of law. So there are many considerations that are always not brought on the table that are inhibitions. And that's why the question of let's consider everything together. It's not one item that will solve the problem of financial inclusion.
Mr. Froman, and then Queen Maxima will complete.
Just very briefly, I would just second what the representative of Bank of America said. There's tremendous opportunity here in terms of fintechs. We have a financial inclusion lab in Nairobi that draws on a lot of fintech entrepreneurs, and something called the Start Path program, which identifies fintechs and gives them access to a sandbox and network and mentoring, and sometimes it ends in an investment too. And I think there's so much that others in the financial system can do to support the fintech industry so that we're getting more and more innovation into the system.
Your Majesty, you have the final word.
That's very dangerous.
No pressure.
No, I think a lot has been said. Maybe the one issue that I'd like to add upon is the whole SME side, which is extremely important. I think that one part of it is not so much, how much banks can actually sort of finance, but there's actually also called public goods, which is, credit registrations, movable collateral. There's a number one, leasing. There's a lot of countries that do not have this regulation and do not have these registries to actually make this all possible. Let's talk about bankruptcy laws. If you actually give finance to a company and you can never settle that, what is your incentive? The risk is too high. So these issues also have to be in place. It's just like, Mr. Mwangi just said, it's just, more than just seeing at one piece of the pie. You have to see the whole pie to actually solve these issues. And I hope that the whole discussion has been undergoing how important financial inclusion is for this continent. And, there is humongous amount of opportunity and hope. You've actually, jumped a lot of issues that we still have in Europe and in America. So there's a lot of creativity here. There's a lot of low-hanging fruit as well. And I hope that all these sort of conversations will lead to a lot more sense of urgency that we can do this, and together alone with all the stakeholders we can actually achieve this. So thank you very much for letting me participate in this panel. Thank you very much for my illustrious panel members. Thank you.
This has been an absolutely outstanding panel. Please give a big round of applause to Mr. Diop, Dr. Karusisi, Mr. Froman, Dr. Mwangi, and Her Majesty Queen Maxima of the Netherlands. And thank you for being here. Again, this is just a teaser for the African Financial Industry Summit. It's going to be this November 28th and 29th in Lome, Togo. Thanks a lot. Asante sana. Yes, we're going to take a picture.